Hier auf Start. Okay, perfect. We are live for today's panel. Today's panel will be about Bitcoin Lightning applications and use cases. For that topic, I have four wonderful guests here who are really experts in the specific field. I guess best would be if we would start with a little introduction round so that you get to know our speakers a bit better. Let's start with Oliver. Quickly present yourself and tell the audience what you're doing.
Oh, sure. So yeah, hi, I'm Oliver. I'm co-founder and CEO of the startup basenode.io. At Basenode, we provide accounting and invoicing for cryptocurrencies, but also, of course, for Bitcoin. And we're planning to integrate Lightning this year. Other than that, I live in Berlin. And I'm happy to be here on this panel.
Thank you, Oliver. And next we have Daniel.
Thank you for inviting me. So I'm Daniel. I'm one of the co-founders of 21, which is the largest German-speaking Bitcoiner communities. And I'm basically here in the role of Director of Business Development for Galloy, which is an open source Lightning wallet backend solution, which can be installed in the cloud to host a scaling Lightning wallet, basically.
Perfect. Then next we have Martin.
Yeah, hello, Martin, my name. I am the founder of Consulting Bitcoin. We are mainly consultancy to help business implement new business models based on the new technological capabilities of Bitcoin, Lightning, everything from mining to Lightning to talent management, IoT. So basically to help them understand the whole thing. And the main mission is to help Germany not to sleep over the Bitcoinization as we did for the digitization. And I think we're doing a good job so far.
I think so too, because I have seen already some very good content of yours. And then last but not least, Sven.
Yes, I'm Sven. I'm from Hamburg. I'm a standing member supporting ITSA since 3 years now, parallel to my full-time job at Deutsche Bank. I have lots of experience in the IT space. I started as management consulting, doing SAP implementations. And after that, I had various IT management positions in the banking industry. And since 2017, I have got in contact with the blockchain ecosystem. And I am focusing a lot on Bitcoin, its technology, specifically Lightning, payment solutions, Strike, and also regulatory aspects.
Awesome. Thank you, Sven. Yes, I'm very happy to have such a nice panel here today with those panelists. As like most of our audience knows, we have been covering a lot of DeFi and Ethereum topics in the past. And let's be honest, Bitcoin was basically the first and biggest DeFi project that has ever been built. And there has been a lot of new updates recently because it's constantly being progressed. And so we are very happy to discuss today current use cases and applications and also possible future ones. And maybe we can start right away with a somewhat technical question. We see like a lot of new developments, especially in regard to Lightning. The smart contract compatibility of Lightning has been further developed. And I guess that there are possibly some news that maybe Daniel, you could maybe report on some new developments there.
I think what you're referring to is the possibility to enable token issuance on Lightning, or also even smart contracts in terms of that a contract controls the money flow instead of individuals. So there's some ideas to build this on Ethereum, on Bitcoin, similar to Ethereum. I mean, there are different approaches with sidechains. We've seen something like Stacks. We have seen something like RSK, Rootstock. And of course, also similar solutions like Liquid, which offer not really smart contract capabilities, but the issuance of tokens. And on Lightning, there are at least two interesting projects currently being further developed. One is called Taro, which is being developed by Lightning Labs, one of the main contributors to one of the most important Lightning implementations. So they built a solution called Taro where you can issue assets via the Bitcoin network and transfer it through the Lightning network, which is an interesting approach. It's not live yet. We've seen some tests around here, but there is no adoption yet, and it's still in a sandbox mode basically. And then there's RGB, similar to the colors red, blue. What's the G? Green? No, green, I think. Yeah, red, blue, green. So the idea is here to also offer tokens on Lightning basis with RSK, but RSK as the vision of RSK to be really full smart contract capable. So enable a kind of a similar solution like a Ethereum virtual machine, but this on top of Lightning. I'm not sure if this takes on and what the challenges are here right now in terms of make it easy for people to adopt, but there's at least a lot of investment going into these two solutions from different entities and different companies who are interested in bringing this. So for example, RGB is also brought forward by the company behind Tether, and we might see a Tether stable coin on Lightning in the future. I think there's a high probability of seeing that, yes. If we see smart contracts on Lightning and when we see it, I don't know, but at least the idea is here and concepts are here and implementations are being built for that.
I think maybe an important addition is this term smart contract, from what I experience, is often very vaguely used. Most people just have it as a buzzword, and smart contract and what can you actually do with smart contracts. And I think you really need to distinguish whether you refer to having autonomous code running on its own, or whether you refer to software being decentralized, but still in the end, it's just software that has a payment component to it. And depending on to which definition you stick further, you have more or less capabilities on doing this with Bitcoin. So running autonomous code outside of the primary use case of Bitcoin is something that Bitcoin doesn't support that well, but having contracts forged into a payable component like the whole IoT stuff, you can do very well with Bitcoin, especially with Lightning, without having to have autonomous running code on its own.
Yeah, I think I recently heard a lot about what Daniel just mentioned with like Liquid, where you could basically like issue security tokens. I might be wrong, but I think it was Stoker from Luxembourg, because we just had now already like one comment from the audience who said, but Liquid implemented recently collateralized on-chain option contracts. I don't want to like enter this topic now, but it seems like that there's a lot of like developments being made that are not always so obvious to like the general Bitcoin users. But also thanks, Martin, for the explanation in regard to smart contracts, because I think this was also something where when there was like the big news, like Taro smart contracts coming to Bitcoin, I think many people were asking, okay, when will we see like the first stable coins? Daniel, you just mentioned that we would possibly at some point see Tether.
Pretty sure. I mean, the company is investing in it, right? So the company behind Tether is investing in the RGB technology. So, I mean, why would they do it if not to get Tether onto the Lightning network through this kind of protocol? Not sure. I mean, maybe we don't see it. The question is also, do we actually need smart contracts on Lightning or not? What is the reason why we would need smart contracts, and could we solve the problems we are having also without smart contracts? For example, in my opinion, if we look at for example the sidechains first, Liquid specifically, you mentioned security tokens. Security tokens, in my opinion, totally make sense. Like, it brings so much efficiency into the system of trading company shares and managing company shares. This is a no-brainer. But the problem here is if you have like shares which are managed on a chain, you need to somehow connect it to the payment system. So you need to either have like USD stable coins which can be transferred, or I mean, we are thinking that Bitcoin is the future of payments, right? So, and Lightning is the future of payments. So you somehow need to get Bitcoin payments into the realm of company shares and securities. And this is what Liquid is doing quite well. So you can easily send funds to the shareholders in Bitcoin through the Liquid network, and this is the main purpose. So you can issue your security tokens on Liquid and can execute the contracts you have with your customers, can execute them directly with the payments on the Liquid chain, which is great. And the other use case for real smart contracts I see is DAOs, decentralized autonomous organizations, and this is what's mainly built on Ethereum. So these DAOs and dApps and everything should work without a legal entity in the physical realm, basically. So just having a legal entity on the blockchain. And the question is, do we actually need smart contracts for this? Because there is a project on Bitcoin called BISC, and BISC demonstrated quite well with a burn mint equilibrium as a mechanism for an own token, that this could actually work, that the decentralized autonomous organization could actually work without a smart contract by leveraging the burn mint equilibrium in the token design. I think this is a very novel approach, and it's still not completely understood, and a lot of research needed. But I would question that we actually need smart contracts on Bitcoin at all, because it makes things much more complicated and riskier. And even if it's available, or when it will definitely be available. The question is, will it take on? Will there be actually something be built? What makes sense?
Mm-hmm. Yeah, I think the next, I would say 1 to 3 years will tell on basically where the journey is going. Just like a quick remark, because I've recently heard that from somebody who's very, very well connected with like regulators in Brussels, like the DAOs need to be very cautious at the moment, because I've heard that there might be some initiative called DINO, decentralized in name only. So this will go after projects which apparently are decentralized, but in fact are highly centralized, right? I once had Oliver Ricken here from Two Tokens. He likes to call those projects dictatorships, because there's people holding like 50, 60, 70% of all governance tokens. So this will be like, I think like all this topic around DAOs governance should be also something that we might pick up again in another panel, because it's very complex, and I think it will very much be relevant for the future. Let's maybe move to like one application which was most hyped during the last bull market. I know, Sven, you are very much interested into that topic. The project is called Strike, and I'm not sure if it's already available in Europe, but I think it's already fairly used in the US. It's also already implemented with Twitter. Do you have any news on the current status of the project, and how are they doing at the moment?
Yes, I can give you, I think, first some background for those who are not that familiar with Strike. The application was announced last year on the Bitcoin Miami conference by Jack Muller, the CEO of Strike, and he said his vision is it should be an instant and free payment service which you can use in every country. It's not available in every country right now, and not in Europe at this point of time. And that is his main goal. Maybe just some how it works, what's being used. Its Lightning network is being used. They also run their own Lightning nodes. And then they have also for so if you want to pay in euro from the US dollar, you want to pay in euro, then you need to you need to convert it, and therefore you need partner companies. So they have partner companies, and they are using them for doing the exchange rate conversion. And then also you have some KYC. So if you use the Strike app, you need to put in your name and your phone number. If you have larger amounts which you want to transfer, then you have to also do a proper KYC process. And the main things what you can do with the app is BTC payments. So you can pay in BTC, in fiat you can pay, and you can also do Lightning payments. That is what it's about. Use cases, of course, everyday payments, and the best use case, of course, cross-border payments. So usually the people who want to transfer money to Africa or so, they use MoneyGram, Western Union, and they charge 8%. And with Strike, as I said, and maybe I say something to this in more detail, they say it's feeless, but it's not totally feeless. So first of all, because you use a Lightning Network, you have the Lightning Network fees, which is a cent or so. It's not a lot. And then, of course, for the conversion. So if you convert from the US dollar to a different currency, you need to pay a conversion fee. And in this fee, also Strike is getting a portion out of it. So this is the use case how Strike is making money. But overall, it should be less than 0.2% if you convert from USD to a different currency. And then, yes, they also offer an API, and Twitter is using it. So then you can also do payments within your app using the Lightning Network in the background. The development. So when it was announced, it was available in the US, in Argentina, and in El Salvador. And just recently, last year, December, I think it was also live in Nigeria, Kenya, and Ghana. And in January, it went also live in the Philippines. And there you have a lot of transactions. So I think 10 billion of US dollars are every year transferred from the US to the Philippines. So this is a huge case for Strike. Then regarding further development, whom they are partnering with. So they, when they announced it, they work with Shopify and NCR. And Shopify, you need to know they have 500,000 business in the US are using Shopify, and they could offer to their customers the Strike payment. If they do, I don't know, but they could do. And now Jack Muller is working on Wendy's and Starbucks also to get them on board, that Strike can be used there too. Then they also collaborating with payment companies such as Block, former Square, and PayPal, and also some connections or collaborations with Visa being done. But he's not officially announcing everything so far. And what is the USP of Strike? I think it is really a disruption to the payment world. So I'm working at Deutsche Bank, so payment is a huge business for all the banks, but it's very, very complex process. So if you pay with a debit card or credit card, you have a lot of processes behind that. So you don't get the money instant. I mean, you see it on your account and so on, but there are different companies in the background who are doing all the transactions, wiring the money, and so on. So this is also very expensive, 3 to 4% in average, depending on what kind of card you use, which country you are in. And so I think this is really disruptive because you have really an instant payment. You pay in a few seconds, and you don't pay really a lot. So you're, as I said, below 0.2%. And not the 3-4%. And I think this is a huge case. And also for cross-border payments, it is really a new way of handling payments. So maybe this will be shifted also in the banking industry in the future, but I think it will take some time until this will be adopted. Yeah, that is so far what I can tell you about Strike. If you have some more questions about it, I can also get into that. And I guess we will we'll learn more on the next Bitcoin Miami conference when Jack Muller will be presenting more about Strike. And yeah, thanks for that. Back to you, Christian.
Thank you, Sven. I was also very, very detailed, I have to say. Like, does somebody want to add something to the topic of Strike? Is there anything that surprised you or you were interested in to see next? Does anybody of you guys know when we will see like support for Germany, or like when we can use it here? Does anybody know by any chance?
I mean, there were many dates already communicated, and none of these were. I mean, it's probably a question of how much money they are spent on they will spend on regulation, or fighting the regulation, or dealing with the regulation, however you want to name it. But I think regulation is their biggest hurdle to get to Europe. And once they solved it, and it takes a lot of money, obviously, once they solved it, it will be available. But there's no date communicated, and I guess it's because they are focusing more on these remittances use cases, and there's not really a remittance use case in Germany. So this might be one reason, or in Europe, not so much the remittance use case. So this might be one reason.
I think that's right. And they also got a lot of money end of last year. They did a fundraising and they received 80 million euros US dollars
Yep.
out of it. So I think they have money to spend. But I think, yeah, cross-border, that is also what they're mentioning, cross-border payments. This is their biggest use case because you save 8% or sometimes even more just for transferring the money.
And they just also reduce or increase their runway by reducing the burn rate of around probably 30%, because if you look at LinkedIn, the employee count declines around 30% only on LinkedIn. So I guess that there will be probably also a lot of your lawyers and like management being affected. So developers focus, or they probably focus on development right now. I don't think we will see it this year in Germany.
The important thing about Strike, from my opinion, is not so much when Strike, so the exact solution is coming to which location, but the important case is that it very well showed that using Lightning as a transfer medium, even if you want to send and receive fiat, is a valid case. And I think there will be many variations that we will see, and other companies that will start dealing with this, because the capabilities of having Lightning as a railway are just huge, and fiat can't compare with them. And I think that's the important case that Strike actually shows.
Just that you guys know Oliver, did you just want to say something? Yeah.
Yeah, sure. Yeah, I've been listening because this is really yeah, I mean, I would listen to this if this was a podcast. I would be very much into it right now, but I can even talk right now. So lots of good information there. So as I said, we are running our startup business based on this assumption that remittance fees are too high, and we're trying to solve this very problem, especially for freelancers. And the problem you just stated is huge. We have more than 1 billion people in the world who work independently as a freelancer, and our banking system, it stems from the Bretton Woods Agreement, which was like after World War II, and it's really not made for all these transactions coming from these emerging markets, and everyone is transacting with one another. So what we currently do is using other blockchains for stablecoin transfers. So the startup that I'm running, BaseNode, is trying to solve the problem of paying a freelancer in an emerging country, maybe even from Germany. So there is a remittance use case also. If you want to send money from Germany, you need a proper invoice, and regulation is a huge topic. And currently, it works more or less like this. Most of our customers want to receive US dollar stablecoins. Yeah, so they get paid on Binance Chain because it's the cheapest way to transfer stablecoins on their phone, and then they receive US dollar coins. We don't do so. What they don't want is receive the local currency in most cases, because imagine you being a freelancer in Turkey or in any other country with a weak fiat currency. I mean, you can receive maybe your Turkish lira, but then it has 80% inflation per year, and you cannot really save money that way. So what you really want is dollars, and most people are not yet. They didn't understand yet that Satoshis are actually even better for saving. So what they want is something they know, and that's in most cases a stable coin. And well, now we can have the possibility to use stablecoins on Lightning, which is, in my opinion, far better than using Polygon or Binance Smart Chain, which are most commonly used now because they're just cheap, but they're centralized, and it's not really. I mean, why not use the most secure network for your stablecoin transfers if it's just as cheap and fast? So yeah, I think this is a huge point. And to the other point that was mentioned, regulation. So my startup BaseNode is located here in Berlin, Germany. And we recently just introduced our new feature, fiat to crypto invoicing. So what we want to do is you send an invoice, your customer pays with his credit card, and you receive your stablecoin, for example, right? And it's not that easy to implement here. Technically, it's totally possible, but we have been consulting lawyers recently for the past weeks. They were telling us, okay, you need this license, you need this license and that license. You need to borrow a license from your third-party supplier. What is exactly happening? Where is the exchange located that is doing the transfer? And so it's a lot of legal work to do, and I can totally understand that. Strike is not preferring to launch in Germany right now because
Okay.
it's just a lot of work. So these are my 2 cents.
You just have to know, guys, there's some personal interest with me because my hometown, my dad is currently mayor, and I was always suggesting to him we should make it the first Bitcoin village in Germany.
Good
so
idea.
we are still, yeah, you see, it would be like perfectly as like also for like tourism, everything, you know. I think it would attract great people coming to my hometown. But unfortunately, Strike isn't there yet. So I always try to keep checking on, okay, when finally there, because I have to admit, in my hometown, most things are settled in cash, you know, and it's horrifying for me sometimes because I'm very much not of a cash person. But yeah, you see. So in case any of you guys has any solution in the near future, always feel free to contact me, and then we can figure something out on that topic.
We should do exactly that, because bringing Bitcoin not only to companies but basically Bitcoinization in every dimension. So let's have a deep dive on that.
Yeah, and you know what I also think it would be great to have something like a little course at the school, you know, go to the to some of the secondary schools and then just like teach them also about Bitcoin. And I mean, it's involves so many different aspects, right? Governance, technology, economics, you know. I really feel like it's Bitcoin obviously, but you could also take Ethereum or some other topics, right? But I think this is really like so crucial knowledge nowadays. It's so vastly available in the internet, but it's not being taught at the schools. And I think this is something, yeah.
One side note here. Being the first in adopting Bitcoin, like being the first country, being the first city, being the first restaurant in your city or whatever, right? So it all has a marketing effect. It drives Bitcoiners to your business. So Martin and I, we're doing a podcast together called The Bitcoin Effect in German. So it's only a German speaking podcast where we exactly talk to business owners about the effect Bitcoin had on their business and what kind of what other people can also learn and learn from this and adopt the strategy of being a Bitcoin only business and being a Bitcoin first business and leveraging the Bitcoin effect here.
And there's funny that you said it, because I think like 3 or 4 months ago, we discovered a property for sale in a small village. It was like, I don't know, like one of these really small German villages somewhere in the nowhere. And we founded a small group thinking about how can we buy these like 5-10 houses and then just make a Bitcoiner community there and build a German Bitcoin village and already develop some first concepts and so on. So I think the race is actually already on, and probably you're not the first city or village thinking about this. Because there are huge opportunities, be it from energy management to education, to talent management, to infrastructure, and so on. This is like, it's a huge field, and you have the opportunity to create something like what you have in Switzerland with Zug, where you have basically the crypto valley, where the infrastructure just supports all different kinds of companies coming there, flourishing, interacting, and basically becoming the Bitcoin Silicon Valley.
What you're saying, by the way, you can't be the first city because Lugano already took this chance and marketed itself as the first Bitcoin city.
But you can be the first German city.
That's true. Yeah, good point.
Indeed, yeah. But I
definitely let me know when you know. So when you start this, definitely let me know. I might move there. But it's
I also wanted
to mention, you don't want to be first, you don't want to be last, right? So game theory kicks in. So as soon as someone starts, most of the players will follow, but someone needs to start.
Yeah, but I also wanted to mention Lugano, because what I'm seeing right now is, and this is very nice to see, I think actually in Switzerland, that there is competition between Zug and Lugano as like which city is better at crypto adoption. And I think when we compare it to Germany, I mean, obviously, I think Berlin is like the center for now still for all of crypto. I mean, Frankfurt has certainly a relevance, but it's more on the, let's say, financial side, security tokens. So maybe we can hope that in the near future, there's more to come, that we also see something similar in Germany. By the way, I don't want to talk too much about Ethereum, but also because Oliver has just mentioned that he's mostly using stable coins. And there was one question in the chat which goes like, do you see layer 2 solutions on Ethereum like Optimism or Arbitrum as like a true alternative to Lightning? Or would you say they are vastly different?
So is this question going to me? Yeah, so I can answer shortly. We are supporting Ethereum, and we're also supporting layer 2s of Ethereum, like Polygon currently in our software, and people are using it. So they are using it to send stable coins, but they are using it because it is cheap and fast. So they don't really care about the security of the network right now, which is, I think, going to change. As soon as we have stable coins on Lightning, this is, in my opinion, the better choice, because it's far more secure to transact on the Bitcoin blockchain than on some second layer of a centralized blockchain. So yeah, I think we will go this way in the future. But
yeah. Also, just one remark from my side. If you check for liquidity on L2s like Optimism and Arbitrum, I think for bigger business use cases, you will very quickly notice that there is not that much liquidity. I mean, on Arbitrum, I would say I'm not 100% certain on how much TVL they now have, but I recently tried to bridge some money, and there was literally no liquidity on any bridges, you know. So it's really, I think you really
so
have
you drove the price up or down with your bridging.
No, I later opted for, I think I used Top Exchange, and I had to pay $150 in like bridging fee, which was very frustrating. But like, I mean, there's always about what's being promised and what's being delivered, and I can certainly tell most of the audience that for now, major business use cases on L2s, there's just not enough liquidity. It's really like maybe in the future, but for now, it's literally like retail having some fun with some DeFi protocols, which is fine, right? But let's say for like institutional and real adoption, I think is still lacking a little bit. Let's move to another topic, because I saw a very nice panel, or let's say like presentation from Martin. You were talking about microtransactions with Lightning, and I have to admit, I was very interested into that topic. I think like 2-3 years ago when I first heard about IOTA. Unfortunately, still like a fairly centralized protocol. The coordinator is still there, but that's another topic. But you were also basically touching on, I think it was mostly IoT also as well, like use cases and micropayments. Could you maybe elaborate a little bit on what are the possibilities?
Yeah. So the talk was about how to reduce credit dependency and credit necessity in production environments by using Lightning payment streaming. So the base idea is, we developed this together with Heidelberger Druckmaschinen. So let's imagine you have a printer, huge printing machine, so not your at-home printer, and you need paper and color. Let's take paper because it's better segmentable. So you take paper, you take color, and what you usually do is you print something, and for that you need the color. So you order the color, your supplier sends you the color, takes like a week or so so the color gets to you. Then you use the color, and usually after you used it, you have like a 60-day window until you can actually pay the color. So you have like, let's say 60 to 90 days between delivering and getting paid as a supplier. So what you're going to do is you're saying, okay, I don't want, because you need the money. You need the money usually now because you have other business expenses and so on. And what you're doing is you're going to an invoicer. The invoicer is basically, you're giving him, he's giving you the money, and you're transferring the debt that your customer has. He's transferring it to you, or you transfer it to him. And then you get the money now, and he collects the money later. But he's taking for 60 days, he is taking 3%. So you're basically getting 97% out of it. So what you're going to do is you're going to add the 3% to the price. So your customer pays 103%. You get 100% of the price of the color. And so that means that for 60 days. So that means 18% per year. Every everything goes basically through this process because this is industry standard. And this means that every time goods transfer companies, you're losing about, they go through this 18% credit a year, which is like huge. Which is like if you have low credit scores and you go to Klarna, then they charge you 20% as well. And this is what you basically go through every company transfer. And goods usually have like 5, 6, 7, 10 company transfers during their life cycle. And this is huge credit dependency because this is basically what's done in the banking system. And the opportunity that we developed was to say, okay, imagine you're paying now. And by now, I mean like the moment you use one drop of color, you are doing a micropayment via Lightning, and you pay every single drop of color the moment it's used, which means that as a supplier, you're not having any delay in when you get the payment, and as the customer, you're basically getting better conditions because you're not going through the 103. But then you have still the issue that that the customer wants to have the opportunity to pay later. So what you're going to do is you take an invoicer again, and the invoicer basically says, okay, I'm going to give you the money to so that you can pay directly the moment in this pay-per-use process as payment streaming when you use the color. But because you're doing it as an automated payment splitting, so you're the customer, you pay your drop of color, and one part goes to the invoicer, one part goes to your supplier. And that, so since it's an automated process, the risk is way lower. The default risk is way lower for the invoicer, and so he can give you better conditions, and you may be going down from 3 to 2%, which means like you're going down from 18 to 12%, which when you look at the volume of goods and the money that is associated with it is like huge in terms of credit reduction. And this is basically what we developed. We called it Bear Pay because you're basically having a Bitcoin economy asset rail that improves the credit risk and makes everything a huge amount cheaper.
What's interesting about this concept is there are actually several companies in the US implementing this idea in the energy market. Sinota is one of these companies, which I find very interesting because also in the energy market, this additional cost, this additional overhead you are having for late payments. Imagine in the energy market, you get your bill like after you consumed your power after a month, or sometimes even after 3 months, so quarterly or so on. And you also have a fixed price, so you don't pay the actual price of the energy, but you have like you have a fixed price or an arrangement with the power company. And there's so much risk in getting paid late and stabilizing the price, and all of these risks. This risk needs to be managed, and this management of the management of the risks is quite expensive. Like you have the credits, you have the risk management, you have an overhead of they calculated around 10 to 15% of the costs of energy is just for the financial overhead. And by implementing Lightning and getting payments directly, paying per kilowatt hour or even less, makes improvement to the energy grid that not only you get a reduction of the prices of around 10 to 15% or even more, you can also make sure that the prices are actually current, like that they are reflecting the current price of producing the energy, which is novel and couldn't be achieved before Lightning. And I think this is a very interesting approach, and no wonder there are several companies in the US tackling this problem and trying to get their foot into this industry.
And maybe building on this, because the energy example is a very good one when we're talking about the environmental impact of Bitcoin. So imagine that what we have this energy production, we have the stack curve. So you have like solar and so on is producing during the day, but the highest energy demand is usually during evening hours when people come home, they turn on their lights, they turn on their TVs and so on. And so you have a mismatch between supply and demand, a timely mismatch. And that is reflected in the price. So during noon, when there's a lot of production, usually energy prices, so the spot prices drop, and in the evening they go up. And what you usually want to do, if you want to conserve energy, is you want to incentivize people to use the electronic devices in times of high supply. So if you think about when do you turn on your washing machine, do you turn it on in the evening or during noon? And noon is better, also better for the environment because it better utilizes the available energy. And what you can do with this is you set strong incentives, because you can actually do spot market price selling. So you stream your power, you pay the power that you use the moment you use it, and for the price you use it. So that means like
for the price it's being produced.
Yeah, at the price it's being produced. So that means if you're turning on your dishwasher at noon, it actually saves you money in comparison to when you do it in the evening. But if you just have a flat price, you have no incentive to save power according to the demand and to the supply. And so this is a very valuable impact in changing people's behavior towards a more energy price consumption. It improves the signal and the governing aspect of the price signal.
Do you think you can do it without smart meters?
No, it's including smart meters. Obviously, meters, the smart meters are the ones who are triggering the transactions once it's consumed. Yeah, I mean, you need to have some IoT devices triggering the transactions. Yes.
Yeah, I think currently we have like 15-minute update intervals in Germany for smart meters. So we are still way too slow for this. I mean, this is a nice vision. I would love it.
But you can bundle.
To see it.
I mean, that's not an issue. You can just bundle and then just pay every 15 minutes. I mean, that's
but then you have an average price of 15 minutes, right? So
which is not better than
but average
on
price of 15
right
minutes
now is gone then, right? But I mean, it's going in the right direction still. Yeah.
It doesn't have to be on a 15 minutes basis, because you have to put in consideration the intellectual load that users will put onto this. They will not update their price every second, but the difference between having it tracked on a 15-minute interval versus having it tracked on a per year base, which is usually how often you renew your energy contract.
Even daily or weekly is an improvement, right?
way bigger. And also, if you see, like, I mean, you can many users love if they get statistics and how much energy you save by your consumption and so on. So you can do a lot of awareness and gamification elements that really trigger better behavior in users.
But the most important part is it's decentralizing the whole grid, right? So this is the most important part here.
Yeah.
Mm-hmm. Yeah, makes sense. Yeah.
So is this something you guys, like, I mean, I know that this was a topic already, I think 2-3 years ago, where I think we had like also internally with ITSA, something called machine-to-machine wallet integration, where it was about that essentially one machine orders something from another machine and they're communicating. It's like an integrated wallet. And so do you guys think that like IoT-based use cases will become more popular over the next 2-3 years? Is this something that you foresee?
So I see, I don't only foresee it, I see it because it's part of what we're doing. So we're getting also customer requests for building stuff like pay-per-use models in the automotive industry or in the rental industry or different ways. And we're doing software development as well and building a software stack to basically accommodate to all these different pay-per-use and asset as a service elements. And there is demand. There is demand where people go to us and say, okay, we want to do this on a pay-per-use basis. And there's an economy case that you can just see. It's valid. It has a lot of potential. There are some things that you have to work around, like how much Bitcoin adoption is there, the volatility risk, and so on. There are things that you have to manage, but the demand is there.
Mm-hmm. Okay, then I will definitely check up on that, because I know my last state of like knowledge is like already, I think 1.5-2 years old. So I will maybe I will even ask you for some very nice sources, so then I can check up on them again, because we have to write every week an article with ITSA. And this sounds like a very interesting topic, also regarding our general audience, which likes to have different topics covered. But now I would quickly make a switch back to you, Daniel, because Galloy, you have already mentioned it before that you guys are developing the Bitcoin Beach wallet. However, there's also stable sats. Yeah, I think those are two very interesting use cases that you are like building there. Do you want to maybe explain a little bit more on yeah, what's like the core, the heart of your development?
So Galloy is actually not running directly Bitcoin Beach Wallet. So Galloy is a technology company, mainly engineers working at Galloy, building an open source product or open source software. And this open source software is basically a backend for a scalable Lightning wallet, a scalable custody Lightning wallet, right? So this is important. So we're talking about a custodian here. So the software contains all the necessary requirements to run it in the cloud, contains all the necessary requirements to connect to the Bitcoin and Lightning network on scale and with redundancy, obviously. And it also has an accounting ledger to manage user accounts. And it also has, like what you mentioned, a so-called stablesats module. And the stablesats module is running on the instance at Bitcoin Beach Wallet. So Bitcoin Beach Wallet, you can imagine it as our kind of sandbox environment. So it's our own daughter or subsidiary company. And this subsidiary is basically running our open source stack. And as the backend for the wallet. So you have a full-fledged Lightning wallet with Bitcoin Beach Wallet, soon to be renamed in a few weeks. So you won't find it under Bitcoin Beach Wallet, but then you will find it under Blink Wallet. And Blink Wallet offers like the Bitcoin account, where you have a Bitcoin kind of bank account with Bitcoin Beach Wallet or with Blink Wallet in the future, where you can hold your Bitcoin and send and receive transactions via Lightning, but also on-chain. Additionally, you have a USD account in this wallet. And this USD account is not actually holding, or the bank, the Bitcoin Beach Wallet bank, is not actually holding USD. Actually, it does not have any access to the fiat system. It's a Bitcoin only bank, right? So it's only the only reserve Bitcoin Beach Wallet holds is Bitcoin. So, but how can Bitcoin Beach Wallet now represent a US dollar value to their customers and have US dollar denominated accounts, although it's Bitcoin only backed? So there's obviously a risk in the conversion rate and the volatility of the conversion rate, and the bank needs to manage this risk. And the bank is basically running a hedging mechanism in the background, making sure with so-called perpetual short contracts. So you have perpetual short contracts, which the bank leverages to go short on Bitcoin and make sure it will always be able to pay all the liabilities, even denominated in USD. And that way, basically a Bitcoin native bank can offer not only a Bitcoin bank account, but it can also offer a Lightning bank account. And a USD bank account, which is backed not only with Bitcoin, but which can be used to transact via the Lightning network, right? So you use the Lightning network to receive USD in your account, but you can also use your USD account to send through the Lightning network. What's being sent is obviously sats. It's not euro or dollar what's being sent. It's satoshis what's being sent, and it's converted on the other side if into another currency, if a wallet supports another currency, or it's being received in sats on the other side and stays in sats, whatever the receiver wants to do with the funds. In El Salvador, so the whole project was started in El Salvador. In El Salvador, we see a lot of adoption of the Lightning network, specifically also with the state-owned wallet called Chivo. So we see a lot of people transacting between Chivo and Bitcoin Beach Wallet using the stable sats feature, so using a dollar-denominated account in the Bitcoin bank. And the interesting thing now is it's all open source, so it's completely open on GitHub. Everybody can fork the whole backend and deploy it themselves in the cloud, including stable sats. Of course, you need to connect to your favorite dealer of short contracts. There are not so many at the moment for this specific contract, and the liquidity is not so high yet, but it's improving. But yeah, so you can basically take the whole backend and deploy it yourself, and you have a full-fledged Lightning wallet backend with a USD Bitcoin-backed account.
This sounds amazing. That would actually be super useful for what we are doing, especially for remittance payments and so on, because people are used to US dollars. Most people are not Bitcoin maximalists. They want dollars. And this is how to get them. And first I was a little bit worried because I was like, okay, so these dollars are not real dollars. They're like collateralized. And I mean, there's always a risk of
collateralized with Bitcoin.
But then I was like, these dollars are actually backed by Bitcoin, and dollars in my bank account are backed by I don't know what. So actually, in a sense, it's even a little bit more collateralized than the dollars in my bank account. So I think this is amazing if it works.
Yeah. It doesn't work with every currency so far. Liquidity is only available in USD, and there's a little bit liquidity in euro available if you want to have a euro stable such similar offering, right? So just one important thing: it's not only Bitcoin Beach Wallet what is offering a Bitcoin-backed USD account. There are more offerings in different kind of constellations with different kind of hedging approaches. But what I think is quite interesting is Collider XYZ, written with a K. They are a derivatives exchange, but they also offer a wallet where you can experience stabilized Bitcoins in USD and in euro. So there is a euro stable SATS situation available. So it's not really stable SATS, it's not our module, but the concept of hedging the exposure in the background is nothing new. And what's also quite interesting, if you think, Sven, you mentioned it, maybe banks will adopt Lightning in the future just for international transactions, but they need to do their business all in the local currency. The interesting thing, what you can also do with this mechanism, you can, as a bank, you can hedge your exposure in Bitcoin you need to access the Lightning Network by going short, but you can transact basically that way. You can transact your native currency you're dealing with at your bank branch through the Lightning Network in SATS, and the recipient on the other side can do whatever they want. And this is quite interesting because Bitcoin, it's not only Lightning as a payment rails, it's also Bitcoin as an asset with the highest liquidity after dollar with all the currencies over the world, right? So you can either go through dollar by converting between all the smaller fiat currencies, or you go through Bitcoin converting to all the smaller fiat currencies. And I think Bitcoin is a very interesting option because it's neutral. And this is why I think banks will adopt the Lightning Network, not only for the payment rails, but also for the neutral asset they can use to interact with each other on a global scale.
Because the liquidity makes it cheaper, I guess.
Exactly. Right. Liquidity and the payment rails makes it ultra cheap for every bank. Yeah. I mean, the network is super small. Right now, it probably doesn't make sense for every bank to join the network, but every bank should have an eye on the network and decide when is the right point to join the network.
Mm-hmm. Yeah, this is also still something that comes quite often to my mind, that liquidity is king in crypto. And while you will see also a good amount of liquidity for Ethereum, the further you go down the ladder, the worse it gets. And I think once you reach like cryptocurrencies in the scale of like rank 30, 40, 50 on CoinMarketCap, for example, I think there's like $1 million buys or sells, which will move the price for like several percent. And it's just, but I feel like it also shows that we are still in the infancy of like basically cryptocurrencies. I mean, Bitcoin has matured, Ethereum is on its way to mature, and everything below both coins is literally still highly speculative, I would say, in terms of like usability and also liquidity, whatever. And but let's see what the future holds. But then we still have 5 minutes. Maybe we can even like extend like 2-3 minutes, because then we can still ask 2 questions. Because you, Daniel, you were also just mentioning basically adoption. Where do you guys see right now most Bitcoin adoption? You just mentioned El Salvador, also with the Chivo wallet. Therefore, like the first question would be like, where do we see adoption? And are there possible new countries which will consider Bitcoin as legal tender, just like El Salvador did? Is there anybody?
Okay, it's an interesting question, and I had an interesting discussion with one of my colleagues today just about how do we actually decide where to do marketing? So where's the adoption high? How can we do a good value capture? And actually, we don't know exactly. So there's a lot of guessing involved here. And based on the conversations I had so far with projects launching Lightning wallets, the requests are typically coming from Africa. So there's a lot of African requests coming from all different kind of African countries. There's also, in Africa, we see Central African Republic announced that they adopted Bitcoin, and it's kind of, I had several conversations with them, and I'm not really convinced that there's any adoption happening at all. And I think it was more like they wanted to piggyback on the Bitcoin effect and copy what El Salvador achieved, and they did not manage to do it correctly in the right way. And obviously, the country is really corrupt. It's the poorest country in the world, and 70% of the people don't even have internet or a smartphone. So Bitcoin is Bitcoin, to get a Bitcoin adoption here in the poorest country with the lowest smartphone penetration is, like, in my opinion, a stupid idea, right? But all over the other countries in Africa, smartphone adoption is really high. Also, there is a lot of adoption of the feature phones, and there are solutions to send even Bitcoin and USD through Lightning over feature phones, so through the SMS functionality, which is really cool. So I think Africa is definitely something where a lot of things are happening. Then we have Latin America, where a lot of communities popping up. El Salvador obviously is the kind of thought leader in this region, and a lot of politicians in other Latin American countries are waking up to the success of El Salvador. So I think there's a lot of adoption, and I've very little conversations with European companies, but also a lot of conversations with US companies. And I would love to see more conversations with European companies, obviously. I would love to see any Lightning wallets popping up in Europe. I think currently there is no Lightning wallet or Bitcoin Lightning only wallet being maintained and run in Europe somewhere.
Lipa.
Yeah, just to add on that, I mean, we have, the legal tender, or Bitcoin is a legal tender in El Salvador, but also the Central African Republic. This is already live. And then also what I have based on conversations in the pipeline, you have Tonga, Mexico, Nigeria, Ecuador. If they make it, I don't know, but I think also for the big, and also you have Malta. I mean, Malta is not has adopted Bitcoin, so you can use it there too. And then in Honduras, there was one island, I forgot the name, which was also being adopted so far already. So I think we will see more countries bringing Bitcoin out as a legal tender, but I think also primarily these countries which have a benefit out of it, so meaning have a weak or volatile currency, and I think these will be the next candidates.
Yeah.
Also one important addition on that, we're talking about a decentralized currency, and the whole point of that is that people can decide whether they want to use it or not. And so while we have a lot of countries in developing or poorer nations that think, okay, there's a huge benefit because they have a weak central currency, we also have huge adoption, for example, in the German-speaking area, even if the tendency that Bitcoin will become legal tender might be very low here for some time because the euro is still comparatively strong, the adoption is pretty high because there's a strong community, people dealing with it, people thinking about how to implement it, and so on. So I think you have to, if you're talking about adoption with such a bottom-up decentralized topic, you have to not only view top-down implementation, but mainly bottom-up grassroots community development and where this is strong. And this is exactly the case. You have different areas where you come from different angles.
Yeah, it's probably the top-down versus bottom-up. And in Germany, we are definitely, or in Europe, we are definitely seeing more bottom-up because top-down is more like killed. But the bottom-up movement is definitely there. Although I have very little conversations with Europeans on the technology side and on adopting Lightning, I still see a lot of happening on the private side. Just this year, I'm planning to go to 15 European Bitcoin-only conferences. Which is, and it's not about crypto, it's not about anything, it's about Bitcoin and Lightning and nothing else.
But I know you guys are not regulatory experts, but does MiCA change something for Bitcoin in terms of how businesses might be able to use it?
I would say it strengthens it, because if you have a regulation that gives you confidence, it gives you, it makes it more secure what you're working on, what your company is based on, because you have a clear guidance. And if this is missing, then if new regulations are coming out, then it could really impact your business. So I think it's helpful.
Also, I had an interesting talk with a lawyer who's really good. He's really focusing on Bitcoin law, and he says MiCA is fundamentally a pro-Bitcoin regulation. And one of the interesting things that he said was it treats non-central authority or non-central projects better than central projects. So the whole security versus money thought, and it also makes it more difficult for new token projects to emerge, because they have to fulfill regulations, which Bitcoin, for example, is. It has to fulfill some things if you want to use it, but it's essentially there. Therefore, strengthening the position of Bitcoin against, for example, central bank digital currencies, which still have to emerge and still have to comply, where Bitcoin is already there. And that was a very interesting view on that.
Yeah, I think this is really like a strong point of like true decentralization. Also, basically back to the topic before, like with this Dino, where you say just decentralized in name only. I mean, you also see that with many different like alternative L1s, right? Where I don't know, there's like 70-80% of all tokens hold in like private hands, and you not really know like who's behind that. And so for Bitcoin, we at least know, hey, it's the most decentralized, most secure, and therefore I guess also the safest way for transacting. To be honest, I could talk with you guys like for 1 more hour, but unfortunately we have to come to an end because we have already like 3 minutes overdue. We started a bit late, but that's then fine. I want to thank all of you for participating here today. And I would very much like maybe to have another Bitcoin panel, I don't know, maybe in half a year, 6-7 months. Would be very happy if you guys would be joining again. And for now, I would say thank you for being here. Also, thank you to the audience. Actually, like I have to say, I never had such an active discussion in the chat like this time. And there's also Christina Treve, who wants to thank you, Martin, for I think several very nice explanations you made. And apart from that, I have to read the chat. There's just so many text messages. But thank you guys all for being here, and then see you soon.
See you soon.
Take care.
Thank you.
Bye.
Bye.
Bye-bye.